Well, good morning, Active 12. Big turnout. Good morning, everybody. Let me switch over here. So, good morning, active traders, and welcome to our broadcast today. Can you let me know if the audio is coming through okay? I always have to change the microphones up and wanted to make sure. Oh, thanks, Judith. I appreciate it. Dang, you're good, Ken. Well, I appreciate that. I love that whenever a lady says that. Appreciate that. One tries. That's my two passions in life: is trading and playing jazz on the tenor. So a lot of fun. Anyway, we're going to get underway with today's broadcast. Let's go ahead and get started right now. S&P has been in rally mode, but we might be a bit overextended here. Key support on the S&P is going to be 4100, right? Or 4100, just a few handles down from here. We closed around 414. We got 4100 is a key SR level. We broke through it back on Wednesday, right? Yeah, the Wednesday pop broke us over the 410. It broke out over 410, and then it faded back down. Yesterday was the first sign of a little bit of trouble in the market, right? So we may get a pullback Monday or Tuesday, but we're still in rally mode. Overall, the market's still a strong long market, and now is a good time to be looking for good trade setups. Hey, thanks. Appreciate it, guys. All right, so let us move forward with our charts and see where things are going here. All right. So anyway, that's our S&P. 4100 is going to be key support. We stay strong and long as the S&P stays over that 4100 level. The most difficult thing to communicate with you guys that you need to know is that if the market gets under 4100, all bets are off and we may have an epic crash or an epic pullback of mighty proportions. Let's see. A little illumination there. Illuminati. Anyway, so does everyone get that? 4100. If we get under 4100, sell the market, get into inverses like SQQQ and SOXS, two of my favorites, and UVXY. Those are my three favorites. If we stay over 4100, we want to continue the long thesis. But if we get under the 4100, all bets are off. And correspondingly, you want to take a look at the VIX near 20, right? The VIX has been hacking around here lately. And you can see our SIBO volatility index has been trending down, but we did have a big green day on Thursday, right? So the VIX tried to recover the 20, didn't get up there yet. Remember, like I told you guys a few weeks ago, 20 is the key line in the sand, the key support resistance level for the volatility index. So if the VIX, as long as the VIX stays under 20, we stay the course long. But if the minute the VIX starts to get back over 20, we want to collapse in the open long equity positions and start getting into our inverse. And for those of you who trade options, you'd be buying index puts, but only if the VIX gets over 20. And that's smart. That's correct. That's what I would tell my institutional clients, the floor traders. So, and those guys are tough. They're a tough crowd, right? They'll put you to the test, and they have for years. So I always like to get things right. It gives me a good reputation. So anyway, VIX over 20, we go short / close, collapse in the open long swing trades. As long as the VIX stays under 20, we stay the course long, right? And still, the VIX is still in a downtrend. So unless we break the trend, at least 20, preferably 21, but 20 will be the start of a VIX reversal. That's a sign to fade the market or go short. That's really intelligent, and hopefully that'll help you make winning trades moving forward. Now let's take a look at some of these charts. One of my favorites that I've been alerting traders to since the teens was our natural gas inverse cold, KOLD. I've been calling along since 17 for my live trading room members. Okay, and if you're not yet a live room member, these kind of charts are why swing traders like my live room as well as day traders, because I cover charts like this. I've been calling cold long since fall, since October actually, and then November it started to lift up, and December finally started to get legs. January and so far in February has been really strong. Let me ask a quick question. If you took my long calling cold at 17, or the one at 24, or the one that my live room members got at 32, you would have doubled your money. Boom. The more important question is, where would you trail a stop? I'm all ears. Let me know. Tell me where you trail a stop, okay? Microphone here. I've been watching too much Price is Right, but anyway, where would you guys trail a stop? Tell them what they've won. You've won a new SUV. No, you've won an all expense pay. You've won a trip to better market understanding and price action trading professionally. I've been calling cold long for weeks now, for 9 weeks. Anyway, okay, wow, a lot of answers. 65, 57, 65, 60, 60, 52, 50. The correct answer is 65. What candle do we have up there? Be sure to learn candles exclusively from Steve Nissen at candlecharts.com. We're deeply indebted to Steve because what he teaches works a lot, most of the time, or a lot of the time. So anyway, that would be a shooting star, which tells you to sell if it gets under 65. That's classic. I'd be very surprised if this doesn't go back down to 55, 60 next week. So squeeze as much. The art and science of squeezing as much profit out of an open winner is one thing that I'm really good at coaching people in. So if you're in cold, like I've been telling you guys for weeks now, trail a stop at 65 because of the shooting star. That's telling you when you wish upon a star, tells you when to take the money far. Anyway, sell the 65, right? Again, those kind of swing trades and the explanations are what I cover in my live trading room. If you're not yet a live room member, please give it a shot. It's a money back guarantee for the trial, so you have no risk at all. I've only had to issue less than 0.6%, I think, refunds. Most people love my room. Anyway, it's at trademastery.com/live. That's www.trademastery.com/live. And do be sure to join, and I will give you some good, honest feedback on what's worth trading in my best estimation. More importantly, where to enter and where to exit. Okay, so that's a really good chart, KOLD. Let's take a look at a few more rockstar swing trading charts, okay? If you're swing trading charts that don't look like this, why? There's charts that out there that look like this. So why would you, it's like, why live in a bad neighborhood when you can live in a good neighborhood instead? Why eat hamburger when you can eat steak? Why eat tilapia when you can eat roasted salmon? Anyway, my point is, this was a good chart. CB, I've been calling it long for you guys since it was 470 a couple months back. Anyway, now it's up over 8. So CB is good. One of you guys had mentioned G and W. Another nice steady uptrender, 450 to 580. Not much range in this though. But this is, I won't say it's lower risk, but there's less volatility in it. So for newer traders, this is like a bunny slope cheap stock. 4.5 to 5.5 took forever, but it's, I don't like the lack of range, but for newer, beginner traders, that might be one. Here's one, AEHR, good run to the upside, but a shooting star yesterday. Apple looks good. Now this is one pattern that I like especially well, is a large green candle at the right side of a bullish cup. That means that enthusiastic buyers took it above resistance, and you can see the volume, green volume over 140 million yesterday in Apple, right? So they're taking a bite out of Apple, and now they're eating it. So Apple's up here. This would be a good long over the 158 or the 160 most likely. And again, these are not trading recommendations. This is just educational content for explaining chart patterns. Make sure you consult with the registered investment advisor, which I'm not, before you put on your own trades. Anyway, Apple looks good to me. Facebook also getting a nice recovery play, also known as Meta, with a big gap up. Now we've got shooting stars and a tweezer top. So this tells you to do what? I told my traders yesterday, sell the 197 or no, 196, something like that. Anyway, what's this pattern tell you? It tells you it's at resistance with the tweezer top, so it may fade back from here. It may drop down to mean reversion down to 175, 170. A reversion to the mean is a pullback to around 50%, the X bar of the mean of the immediate range. So 155 to 200, split the difference, it's around 175, 180, so it may fade back down there before doing its next thing. So we don't want to touch it until it gets over 200, right? Well, thanks, Ken. I appreciate it, man. Oh, thanks, Matt, on the AAPU. And thanks, Mary. Yeah, you're right. Probably a pullback. Oh, thanks, Ken. Hey, good to know. Thanks, folks. I appreciate the kind words and the comment. I'm trying to read. They're scrolling. Wow, big turnout today. Anyway, Meta looks good. We got Facebook up here, but it's I completely agree with Mira. She's so brilliant. You're right. It's probably likely to pull back from here. It's more likely with a double shooting star pattern at key resistance at 200. That's very likely going to be it for now. Now, it may gap up over 200, may surprise us, but I think Monday morning may gap down to 175 or so. The play is stay away until it gets over 200 at some point. It may not even be next week, maybe a week after. So anyway, but Meta's up here with a tweezer top at the 200. Really good play, though. If anyone had been trading it, I called it right over 100, remember? I said 100 was key resistance. you could have almost doubled your money, right? Boom, I nailed the call. I called along a 102 for my live room members for a swing trade. And if they stayed the course, we're up to almost 200 now. So you could have almost doubled your money. If you bought 102 and sold like 190 or something, pretty good return on investment. So Meta looks great. Another one to pay attention to is we got Peloton and then Disney, the last couple ones. And then I'll take charts of your guys' choice. So let me know if you've got any hot charts you'd like me to look at. Peloton looks good. I was waiting for it to get over 10 and I got stopped out though. I tried trading it once it broke 10 and I got stopped out and didn't get back in again. Of course, then it runs without me, right? That's frustrating. I lost money on this. I tried to buy the first breakout over 10 because 10 was like a key resistance area. Then I got stopped out at like 8 or 9. I think it was 9 something. Anyway, how many of you have ever done that? It looks like a breakout and then you get stopped out and you say, forget about it. And then it runs way the heck up without you, right? It can be frustrating. That's why it's a numbers game. I'm a big fan of what my colleague Tom Sosnoff says, trade small, trade often. That's absolutely brilliant. And that's the right way to trade. You do trade small incrementally, scale in, scale out. The key is losses on your first trades in a sequence should be really tiny. So I'll start off new swing trades with less than 100 shares. Little baby, what they call piker, the floor traders call it piker trades, odd lot trades, 20, 30, 50, 70 shares. And then if it starts to work out, then maybe a few days later, I'll buy some more. And if it goes against me, I will take a stop, but only, like $1 or $2 on 50 shares is not a big stop loss. Your stop losses define your success or failure as a trader. And if you have bigger stops than wins, that doesn't work out. I've had both profitable and unprofitable years, and the difference between the two is always small stops, the cost of doing business. Another quick tip. When you're looking at your trades, make sure they're a sequence. You should think about any trade attempt as at least 1 or 2 of my attempts is going to get stopped out. So how do I manage that? And it's with position sizing or scaling. As my colleague, the late great Dr. Van Tharpa taught, position sizing, very important. Van found, and Van was a really nice guy. He's a really smart person. What he found was there's some study that showed that something like almost near random trading combined with position sizing outdid proprietary pattern-based trading without position sizing. So you could throw darts with position sizing and do better on aggregate than carefully waiting for a breakout and that kind of thing. So that's very, very important strategically. So the point is, what I'm trying to communicate is make sure that every time you put on a trade, break it into 3 pieces, 2 pieces at a minimum, 2 or 3 pieces, okay? Up to you. It depends on the chart too, and how many shares you want to trade, and how hot is the day in terms of volatility. But do break your trades. Instead of say one trade of say 400 shares, you might want to do 2 trades of 200 shares each, or 4 trades at 100 shares each. So that's important. All right, next chart, let's take a look at Disney. The mouse roars, right? Roar. Disney up at 112. 100 had been our key resistance area earlier, late last year, and now finally climbed over the 100 with volatility and continued to run up. Now tell me some tickers you'd like me to pull up for you guys, okay? And I will start pulling it. Wow, a bunch of them. Okay, I'm going to try and keep up with these. But anyway, here's a pattern to look for. Small candle followed by large candle in an uptrend. Very simple, easy to spot. I've been teaching this for you guys for years. Back when I was doing money show appearances live since 2000, for 20 years, I did money show appearances. And also an acceleration ramp type pattern. Let's trying to read these. Some name brands in there like Netflix and Nvidia, and some others as well. Let me know if you guys have a lot of charts. I'm so sorry if I can't get to them, although I was scrolling by here. I'm trying to catch 1 or 2 here as they run, but let me know if there's any charts you'd like me to pull up. And I will attempt to do so for you. So as you develop a trading plan and you develop an intelligent rules-based approach to trades, I want you to start giving some thought to risk management and scaling in and scaling out. That's It's a pain in the butt. It is work. It's administrivia type of work, but it's important, right? Just like any bookkeeping. As a trader, you want to trade more like an accountant than a gunslinger, right? So take the shots at stuff that's running, but combine that with careful multiple entries and multiple exits. Not too many. There's a point of diminishing returns. You don't want to be doing, 15, 20 different trades at once. But if you have a mix of, say, 3, 4, 5 positions and you start scaling in and out progressively as they take out new highs. And also another quick tip is make sure that your personal volume that you trade reflects or is indicative of the volume of the instrument being traded. So for example, if on a breakout, it does so without much volume, you shouldn't trade large size. But if the breakout occurs on large volume, then you may want to trade larger size. So that's a good tip there. We're gonna wrap up in just a minute here. Let me just quickly run through these. SFM, is it worth trading? No, that's a horrible chart. There's no range. It's sideways, it's choppy. This would be a chart that you'd like to get stopped out in. So, thanks for playing. That's the FTCH. I like the slow, steady uptrend and the volatility. It's just okay, but if it breaks, and I personally wouldn't buy it till it breaks over 8, somewhere like 840. Okay, so it's in an uptrend, but I don't like it because it's following a lot of selling pressure, and I'd prefer to trade things that have been going up for a long time. So it's a just okay chart. Let's see. Next up, AI. That's a good chart. Now that one will play. More for day trading than swing trading, but that's a brilliant chart. I love that chart. What's not to like about that chart? Now, it's ran up a lot, so I'd wait till after the inevitable pullback, which is likely to occur sometime soon. So if you miss something that swoops up, wait till after a pullback and then buy the first bounce or the breakout up at new highs. But say Monday, Tuesday, maybe it goes back down to 20 or something. Then you can reset the trade and go on at 21 kind of thing. That's a good chart though. AI so far is so good. Netflix, that's slow and steady wins the race. Good chart. Shooting star, so we don't want to get long until it gets over 380, but Netflix, that'll play. So far we have AI and Netflix are worthy of consideration. And also NVIDIA, great chart. Yeah, I like that one. That's good. NVIDIA will play over 220. That's a green light. No objections to that. That's a good chart. I'd put money on that. Reddit's a little sloppy with all the tails. What I don't like is I'd probably get stopped out on this because of the tails. Notice how wide the price action lines are in that chart. So for that reason, I would like to, I'd get stopped out on that. So I wouldn't trade it. That kind of professional trading insight is very valuable and important. At first glance, it's a beautiful chart, and it is a great chart from a price action and range standpoint. The range is great, 35 to 50, that's tradable. You got a nice number of points of range, but the fatal flaw is it's got lots of large tails, which would stop us out if we're using tight stops of a point or two, which we should. So does that make sense? It's a good chart, but it's kind of like the person's a great employee, but they show up late all the time. So, yeah. Okay, so the ones I do like, and you guys running about 50%, so not too bad. NVIDIA, Netflix, and AI after a pullback and then a resumption of the uptrend. Really good charts. Again, my favorite one has been cold. And again, a quick point. Whenever something runs up to a decade value, a multiple of 10, for example, KOLD's all the way up right under the 70, that's a good place to tighten in a trailing stop or go to cash, because 70 is going to be like the brick wall that's going to be tougher to break over. So you want to sell any kind of a pullback in that. So if we get under 60, so 65 to 70 is the key support resistance level in KOLD. We'd sell / short under 65 or go long over the 70. All right, you guys have been great. I'm going to wrap up for now. We've had a good session, and thanks to all of you who've been joining the live room. I got a lot of new members this year and so many new folks, and a lot of people. Remember to be patient with learning the process. It takes at least a few months to learn how to use my techniques in real-time markets. It's not like instant. Within 30 days you learn a professional trading approach. Give yourself time. Give yourself a couple of months as you join the room and get live alerts and explanations. And I answer everyone's questions too. Very friendly, trying to be professional. Give you guys whatever help I can to help you make bigger winning trades more often is my goal. So thanks for being here. Hey, thanks, Tony. Hey, thanks, Raymond. Thanks, Judith. Hey, appreciate it. Hey, thanks, Steve. Hey, thanks, Silver. What do I think about gold? Gold had been okay, but I wouldn't be trading gold right now. I don't like large cap tech either, for that matter. I think there's other sectors that may be stronger opportunities. Crypto's been strong lately. Coin. Anyone trading coin lately? COIN? Oh yeah, let me, before I wrap up here, let me show you my day trading charts here so you can see. Coinbase has been the single best chart for us lately. The crypto play, not so much yesterday, but the Wednesday and Thursday. Look at Thursday, around 68 to 85. What a run. I called this long for members. I think it was right over the 70, something like that. Anyway, COIN. Now it ran up and gave it all back yesterday, so a big bearish cup. This would likely be a good play north of 78 for a day trade or short under the 72. But anyway, coin has been a really good day trading chart. Now, typically I cover day trading charts under $20 or $30 a share. That's my personal preference, is things 15, 20, 30 share, like I'm trying to think. NIO is a good one. DraftKings, things down the 15, 20 a share range. But occasionally we'll post charts like this that have big rock star runs, right? How much money could you have made had you taken a shot at these things on the breakouts and got somewhere? You won't get the exact tops or bottoms, of course, but you get somewhere in the region. Like, let's say you bought the low 70s on Thursday and sold the high 70s. That'd be a good round trip. Like, buy 73, sell 78. You didn't get 67, you didn't get 86, but you got a piece of the action in the middle. In between the multiples of 10, between the 70 and the 80 was a good range on Thursday for this. And yesterday, between the 75 and the 85 or so. So anyway, these are the kind of charts that cover in the live room. I hope that I can be of service to you and that you may want to give me a shot. Money back guarantee on the trial, so you can certainly try it risk-free, and love to see you there. We got so many new members on board, and I'd like to give a very intelligent step-by-step approach. I don't play saxophone during the live sessions. I only on Saturdays, in case you're wondering. But yeah, we do have good entries, and I give specific entries and specific exits ahead of time. For example, like you can see over here on the far right column, that's the entry prices that I teach traders how to trade with. So that way I'm not just talking about, hey, it's going up, maybe we go long here. That's bogus. Professional traders and you guys need specific answers. And that's what you get in my live trading open room. For 21 years now, I ran the room. So I give specific entries before the bell. So that way you've got a game plan of where to get in. And once they run, I tell you when to trail a stop. So very good stuff. So let's see. Oh, Franklin, where do you find the entry? It's at trademastery.com/live. That's where to sign up. So anyway, hope to see you guys in the room. And if not, good luck anyway. I wanted to wish you the best. Hopefully some of these insights and some of these strong charts gives you, a very clear visual picture of the kind of charts that are actually worth trading versus all the noise and the chop and the uncertain pullbacks and chop and stop and all that kind of stuff that occurs. You don't want choppy charts. You want nice, clean charts that continue on increasing volume until it fades and then get out sooner rather than later. And I teach you how to do that in the live room as well. So have an outstanding week ahead. I wanted to wish you guys the best in your trades. I want you all to make lots of money. There's plenty of money out there for the world, for everyone. So just a matter of knowing exactly how to trade it. And that's where I come in. So I hope I can give you answers to your questions and be of service to you moving forward. And I think that'll wrap us up. Okay, so take care and best wishes. I'll see you guys next week or Monday in the room. All right, trade smart and make it count, right? You only live once, so let's make it count. Let's work together. I'm here to help you. Join me in the room. Money back guarantee on the trial, so risk-free, right? So I'm very proud of mostly I'm proud of my traders who've learned so much, because I have so many great alerts. Many times the traders will come up with even better charts than I can find because I've trained them for years. So together as a team, we can achieve more, right? That's teamwork. So together, everyone achieves more. So see you guys in the live room. Join now at www.trademastery.com/live. Aloha. Take care. Bye for now.